Welcome back to Down the Road. There's a lot of things going on with the economy for political reasons. Some are saying this, some are saying that. The truth of the matter is the stock market, I never thought it would be at a number it is now. I'm not a big believer that the stock market is an indicator of the economy, but I know someone who can give me advice on whether or not it's this or it's that. Paul Meyers is Legacy Wealth Management. I know he's put a team together there, but when I think of Legacy Wealth Management, Paul's one of the individuals I think of. A lot of people around the area know who Paul is and count on him for advice. Let's bring him in. Paul, good to have you coming down the road with us.
Joel, it's good to be here. It's always a pleasure to be on your TV show.
I want to talk a little bit about where the market is, because the other day everybody took that big gasp about, man, did you see how it dropped? And then, of course, it recovered towards the end of the day. But talk to me about that. Is it that volatile?
Boy, have we been seeing some volatility in the markets. I mean, the other day, I don't have the exact numbers here, but I know at one point the Dow Jones was off 1,100 points. That's a lot. A lot in terms of numbers of points. You know, the reality is the Dow was hovering around 35,000, so when we go off 1,000 points, that's 3%. It isn't the end of the world. But then a day or two later, it was off over 800 points, and then it would recover from that and go up 200 points, and extreme volatility. Now today, Wednesday, the market is showing a lot of positive signs. There's a lot of upside to it. So when it's negative, we say it's volatile. And when it's positive, we say it's a great day.
Yeah, it's a great day. It's a really great day, and I feel like retiring. So when we talk about volatility, is there a certain segment of the Dow? Is there a certain stock that's traded that you look to and say it's so unpredictable, it's such a risk taker that it's bound to do this and this?
You know, many of the stocks are not totally unpredictable. And nothing that we deal with is, you know, over the edge in terms of, oh my gosh, what's it going to do? No one knows. Well, you know, we don't really know where an individual stock is going to go, but we take a look at some of the ones that are, you know, pretty well known, and they're kind of hallmarks of the market. Companies like Microsoft. Now today, Microsoft came out with good earnings, really very good earnings, and they spoke very positively about the outlook for the future. Well, as a result, Microsoft jumps up a whole bunch. That's a good thing. But it also helped lead the market a little bit higher. Tesla was higher today.
Where's Tesla at right now?
You know, I don't have the exact number, but it seems to me it was in the 890s, somewhere in that range, down considerably from where it's been. And
I didn't mean to sidetrack you there. You were talking about
That's okay. And, you know, usually I know those exact numbers, but they've been moving around so much it's hard to remember it off the top of your head. But I would say this. Today is a good day. The markets are recovering, and it's doing what it should. But there's a reason that all this is going on. And here's what it is. And we like to say we pull back the curtains and show you what's going on behind the curtains. Yeah, inflation has been higher. It's been running at 7%. But last year, it was only about 1.5%. So on the whole, for 2 years, we've got about 8% inflation. That's about 4% per year. That's a little bit higher than we'd like to see, but not totally unexpected when you consider we're coming through this pandemic. Goods were hard to get a hold of. It's, you know what's going on with wages, and it's a good thing in many cases.
But the lack of workers.
Right, but that's going to push up prices. That's what happens with inflation. But there are a number of things going on. Today, at about 1 o'clock Central Time, the Federal Reserve is going to end its big 2-day meeting, and then they're going to make some announcements with regard to rate increases. Now,
so by the time people see this, they will know whether interest rates went up. And your suspicion is?
Well, they tell us they're going to raise rates. Right. There's no surprise. In fact, on our radio show, which is carried around the state every week, we've been talking for 5 years about how pretty soon they're going to be raising interest rates. Well, we finally hit that point where they're going to be. They've been telling us they're going to raise interest rates. It would be a real surprise if they don't raise interest rates. And you know, it's kind of an amazing bit of psychology that goes on, Joel, and that is everybody is worried about them raising interest rates, so the market crumbles a little bit. But then when they actually meet and say, okay, we're going to raise interest rates, the market says, okay, that's good. Let's go up.
So what is raising the interest rates? You're squeezing the bubble here and it's popping out where? Is that a means of trying to control inflation? I mean, what What does raising the interest rates from a Fed perspective do?
Well, the Federal Reserve's duty or their charge, their mission is to help moderate the U.S. economy so that we don't have any big unexpected problems. That's really their job. They have a number of tools at their disposal. One of them is interest rates. And what they do is they raise interest rates. Supposedly, that will squeeze off demand a little bit. It will shrink some of the growth that's going on because it's more expensive to borrow money. And supposedly, it will help lower inflation. I'm not a real big believer in that because for businesses, the interest rate is one more expense that they have to pay. Mm-hmm. So when interest rates go up, they have to pay more money to borrow money, and they raise their prices. So I'm not such a big fan of believing that. However, that is the common feeling among big analysts that they raise interest rates, and that's going to squeeze off some of the growth. It particularly impacts companies like technology companies, because supposedly they borrow a lot of money. At least in the past, that's been the concept. They borrow a lot of money, and as a result, they won't grow quite as fast, and maybe that'll be good for the economy. Well, in my opinion, in the year 2022, that's baloney. Who's got more money than anybody? Companies like Microsoft and Google and Amazon and all these big technology companies, they don't need to go out and borrow money. They've got plenty of money. Mm-hmm. So that's my feeling, and that's what's going on. The Federal Reserve is going to be raising interest rates with the idea of trying to kind of calm the market down. One more thing they're going to be doing, for the last 4 or 5 years, they've been pumping money into the economy through a program where they go out and buy bonds, and it pumps money into the economy. It's called easy money. Well, they're going to turn the corner on that, and they're going to kind of gradually pull back their balance sheet so that money isn't quite as easy, and there isn't so much money flooding the market.
I want to talk about, how the economy here is doing, because it's like we're living in this shell. It's like we're living in this area where, where the rest of the world, and we want to complain about it.
Yeah.
We want to talk about gas prices being so high when in fact ours are lower than a lot of people's.
Yeah.
We want to talk about how, goods and all of this. But the simple fact of the matter is we live in a state where ag and oil are king.
You bet.
Ag and oil are king. And ag prices right now are very good. And oil prices right now are very good. And so I don't know how anybody from North Dakota can complain about the economy right now.
Well, you're right. We'll find a reason, though, to complain about just about anything, and we all do, and that's okay. But you're absolutely right. Oil is about $90 a barrel right now. That's a pretty good number. Right. I mean, I remember years when it was at, $37 a barrel, and we thought, well, will it ever make it to 40? Well, it made it to 40 and 50, and now it's up to 90, and the question is, will it make above 100? And that's certainly very possible. And that's not all a bad thing, and nor is it all a good thing. It's just what happens. And what causes oil to go up? I'll tell you what, it isn't some guy in North Dakota or Chicago or someplace like that who is betting on the price of oil. It's the Saudi Arabias of the world and the Russias of the world. They've got a lot of the oil reserves out there, and they're controlling where that price goes. And that's why it's up at $90 a barrel, and it is what it is. You talk about ag prices. I mean, I remember when soybeans were, in the middle of the big export ban and the added fees that were being added to them, and I think soybeans were around $6 or $7 a pop, and now they're around 14 or so. So you're right. The ag market getting stronger, the oil market getting stronger, and those are two big items for North Dakota. Yeah, not a bad deal.
I can't remember the exact amount. I think it was $1.65. But the Trump administration knew that by putting these tariffs on, they had caused the soybean market to bottom. Their answer was to give wheat $1, which that or not $1, but a penny, and to give soybeans $1.65. The soybean farmers loved it, especially those with soybeans in the bin yet. But let me ask you this in relation to how that affects long-term the economy, because in the good old US of A, we think of things as now, and we have a really short memory tomorrow of what now was today.
You bet.
Other countries, not so much. You look at China and you look at what they were doing building infrastructure in South America so that they couldn't be held hostage by, the U.S. soybean market anymore. when you put tariffs on like that, is this a short-term plus when it comes to $14 soybeans? Is this something where the infrastructure will catch up to it, and the next thing you know, our soybean market's going to be going down because of it?
Kind of a complicated question, but my personal feeling is this. Tariffs don't really do anybody any good, because what happens is if one country charges a tariff to the other country on one item, then the other country turns around and charges a tariff to them on another item. And so you got this back and forth thing going on, and all it results in is higher prices, and frankly, it increases some revenue for the government at the expense of the consumer. For example, if I wanted to go out there and buy a truckload full of soybeans, which I don't do, but if I did, and there was a tariff on it, I'm going to pay more. It costs me more money. The reality is tariffs are never good for anybody, particularly in the long run, and they cost money. And it's also a great example of socialism, apparently, at work, because here's what they do. They say, well, we know that we caused you some problems, so the government's going to pay you all this money. Well, that's not exactly capitalism, free market at work, is it?
No.
It's not. And that's okay, because this world is way beyond just a total free market and let things happen the way they happen. There's a lot of controls out there. Ag is a perfect example. People get paid for not raising crops, and that's okay because it's part of the whole market system.
The only problem I have with that is a lot of friends, a lot of people that I care dearly about are complaining about the market itself, when in fact it doesn't take a lot of work with your fingertips to find out that we as individuals through the government have invested in them.
Sure.
And I'm not trying to say just farmers, but farmers have done okay.
You bet, and it's a good thing.
Yeah. Before the break, we were talking a little bit about cryptocurrency. Do you believe it or not?
Cryptocurrency is one of those things that you'll find people out there who say, hey, my son-in-law made $1 million on cryptocurrency, and that's great. But the reality is that as a financial advisor, it's hard to give people solid advice about it because there's no predicting it. A month ago, it was trading at $65,000 for Bitcoin, and now I think it's in the 40s somewhere, the low 40s. Well, that's a big change. There's no, you can't point to employment statistics or housing starts or anything else. It's worth whatever anybody says it's worth. Now, that doesn't mean someone shouldn't own it. If they want to own it, go for it. It's just hard to give advice and to speculate. I will say this. We do have kind of a general principle in the world of financial advising. If the product you're looking at is halfway decent and it's low, go ahead and buy it. If it's high, go ahead and sell it. You'll probably come out pretty well. Because we all know that everything out there, whether it's wheat or soybeans or cryptocurrency, goes up and down and up and down. You might as well buy it when it's low and sell it when it's high.
So how do I use it? And by use it, I mean this, other than trading. So I stop at Happy Harry's on the way home, right?
Just to say hello.
Just to say hello.
Yeah, I know.
Missed Harry so bad. Stop at Happy Harry's on the way home, and I want to buy something. I don't have cryptocurrency in my wallet. I know that sounds very naive, but for the average viewer out there of this show, I'm not convinced they understand. We use the word currency. How does this work, Paul?
Well, you don't physically have typically a piece of cryptocurrency you could give the guy at Happy Harry's. Typically, it's done electronically. You transfer something from one of your cryptocurrency accounts into their cryptocurrency account, and it shows up electronically. It's kind of like sending an email, but that's the way it's transferred. You can buy a Tesla, for example, using cryptocurrency. There's a lot of things out there that a lot of companies are taking cryptocurrency. But, how would you like to buy some cryptocurrency at $65,000 a coin and put it in your account, and 2 weeks later it's worth $47,000?
That'd be a bad day.
Yeah, and
that'd be like taking your dollar to Canada. No, I should put it the other way. Canada taking its dollar to us.
Yeah, it's a kind
and
of a
find
rough
out
deal.
It's only worth this much.
Cryptocurrency is a rough thing, and if people want to get into it, more power to them. It's just hard to give any predictions to that as to what it's going to do.
Okay.
Really hard.
So I shouldn't invest in it because I didn't understand it in the first place. That's what I heard.
Well, I'll tell you, Warren Buffett says that. Never invest in something you don't understand.
Yeah.
And that's for many years he stayed out of technology. Not so much anymore.
Well, Warren Buffett, though, was smart enough. I remember when everybody was saying that rail is dead, that everything's going to be done over the roads, and that, the semis, look at the semis out there. Nobody's going to move anything by rail anymore. How'd he do on that one?
He did real well. And I remember what Warren Buffett said about it. He said, listen, when the rails are doing well and when the over-the-road truckers are doing well, look for the economy to start doing well. It's what we call an advanced predictor of how the market's going to do when those transportation companies are doing well.
Okay, last question, I promise. So you've got Stephen Breyer, the Supreme Court Justice, says, I'm pulling the pin. Not that surprising because, he's a Democrat. He's one of the few progressives on the Supreme Court. And you've got a Democratic president, you've got a Democratic Senate, and of course the filibuster doesn't apply because the Republicans have set that as a rule. And Harry Reid did some of that beforehand. I don't want to be completely unfair here. So how does that affect the market?
Well, I don't know that it'll have a huge direct effect on the stock market or the economy. But Stephen Breyer's been around for a long time. I think it's like 28 years, somewhere in that neighborhood. And he's getting pretty old. And they'll probably nominate someone who's younger and is going to be around for another 20, 25 years. It could be Merrick Garland. Hard to know for sure.
He's already nominated once.
He was, and kind of denied a position through some, kind of...
Not kind of. They wouldn't even give him a hearing.
Well, okay.
And then they ran
trying to be kind
Tony
here.
Barrett through in weeks,
Yeah.
I mean,
Well, so, that happens. But in any case, President Biden's going to have a chance to nominate someone onto the Supreme Court. And there isn't much balance on the Supreme Court right now. And
that's over for generations.
Well, it'll be interesting to see how that happens. But there isn't much balance on there. And as a result, I will tell you this, the market tends to do best when there's balance out there. Whether it's balance between the president and the two houses of Congress or the Supreme Court or wherever. Historically, the market does better when it's balanced. When it tends to go one direction or the other, the market just doesn't do as well.
So it's safe to say that for the market, not just the country, in my opinion, but for the market, it'd be good if Clarence Thomas resigns as well or pulls the pin as well. But he's probably not going to.
No, I don't. I don't see him doing that. But I'll tell you what, he's one of the more strange Supreme Court justices that we have. He doesn't talk a lot.
Who nominated him? I mean, I think I know the answer. It was Eisenhower, wasn't it?
Oh no. That's a long time ago, my man.
I think it was H.W.
60 years ago, for goodness sake.
I didn't know for sure if it was Eisenhower.
Well, no, it was Clarence Thomas and Anita Hill, if you remember the big discussion.
Yeah, I remember that.
Yeah. So it was not that long ago.
Yeah. Not
Eisenhower, come on.
Okay, could have been Woodrow Wilson.
FDR, yeah, one of those guys.